Welcome back to XRP Insider, your trusted source for the latest XRP market analysis, price action updates, and crypto insights. Today we're diving into one of the biggest questions XRP holders are asking right now. Is an XRP bottom finally forming, or is there still more downside ahead? The chart is sending some important signals, and there are several key levels that traders and investors need to watch very closely. If you've been following XRP's recent correction, you know that the market has been under pressure for months, but corrections don't last forever. The real challenge is identifying when a correction is nearing completion and when a potential reversal could begin. That's exactly what we're going to break down today. We'll look at the major support zones, the critical resistance levels, the trend structure, and what needs to happen before we can confidently say that XRP has found its bottom. There is still a lot of uncertainty in the market, but there are also some clues beginning to emerge. So stay with us until the end, because the next few weeks could be extremely important for XRP's future direction. Right now, if we zoom out and examine the XRP daily chart, one thing becomes immediately clear. The market remains inside a larger corrective structure that started after the previous rally lost momentum. While many traders are hoping that XRP is preparing for another explosive move higher, the technical picture suggests that caution is still warranted. The larger correction appears incomplete, and there is still room for additional downside before a sustainable recovery begins. That doesn't necessarily mean XRP is heading toward a catastrophic collapse. Instead, it means that the market may still need more time to fully complete the correction process. Understanding this distinction is important because many investors confuse temporary bounces with genuine trend reversals. At the moment, XRP continues to trade within a broader corrective framework, and until key resistance levels are broken, the dominant trend remains under pressure. The market can certainly produce short-term rallies, but those rallies alone do not confirm that the correction is finished. One of the most important areas currently being monitored is the major support zone, stretching from approximately 49 cents up to around 98 cents. This is not just another random price range on the chart. This zone represents a significant area where buyers could potentially step back into the market if selling pressure continues. The reason this support region is so important is because it aligns with the broader corrective structure that analysts have been tracking for months. If XRP continues moving lower, many traders expect this region to act as a potential landing zone where demand could begin outweighing supply. The closer price gets to major support levels, the more attention they attract from both institutional traders and retail investors. Historically, large support zones often become battlegrounds between buyers and sellers, and that battle can ultimately determine whether a new uptrend begins or whether the market falls even further. For XRP, this support region may play a critical role in shaping the next major move. What's particularly interesting is that despite the recent weakness, the correction still has multiple possible paths forward. From a technical perspective, XRP remains within what appears to be a larger wave-based correction. In simple terms, the market may still be completing a multi-stage pullback before eventually transitioning into a new rally phase. While nobody can predict exact price levels with certainty, the current structure suggests there is still room for the correction to extend lower if sellers remain in control. Some deeper support levels exist below current prices, but the expectation among many analysts is that XRP will ideally stabilize before reaching those extreme downside scenarios. The key takeaway here is that traders should remain flexible rather than becoming emotionally attached to one specific outcome. Markets frequently surprise participants, and successful investors are those who adapt as new information emerges rather than stubbornly sticking to a single prediction. Another crucial factor to watch is the descending trend line that has been acting as resistance throughout the correction. Trend lines often provide valuable insight into market psychology because they visually represent the ongoing battle between buyers and sellers. Every time XRP attempts to recover, this trend line becomes an obstacle that bulls must overcome. Currently, the trend line sits near an important resistance area around the mid-$1 range, creating a significant barrier that XRP must eventually break through before a larger recovery can be confirmed. Until that happens, every rally attempt carries the risk of being rejected. This is why experienced traders pay close attention to trend line interactions. A decisive breakout above a major descending trend line often marks the beginning of a shift in market sentiment, while repeated failures beneath resistance usually indicate that sellers remain in control. Looking back at the correction itself, the decline has unfolded in a fairly structured manner. Since the market peaked and began weakening, XRP has consistently produced lower highs and lower lows, which is one of the clearest characteristics of a downtrend. Throughout this process, there have been several relief rallies that initially appeared promising, but ultimately failed to change the broader direction. This pattern is common during corrections, because markets rarely move in a straight line. Instead, they alternate between periods of selling and temporary recoveries. Many investors become optimistic during these bounce phases, believing that the worst is over, only to see the market resume its downward trajectory shortly afterward. Understanding this cycle helps investors maintain realistic expectations and avoid making emotionally driven decisions during periods of volatility. Earlier in the year, there were already signs that the market might need one more significant leg lower before a larger bottom could form. While XRP did experience some rebounds along the way, those moves largely resembled corrective bounces rather than the beginning of a major bull run. A genuine trend reversal usually requires stronger evidence, including higher highs, higher lows, and a decisive break above key resistance levels. So far, XRP has not yet delivered those confirmations. Instead, the market continues to trade beneath important resistance zones, suggesting that caution remains appropriate. This doesn't mean investors should become bearish forever. It simply means that the evidence needed to confirm a lasting bottom has not yet fully appeared on the chart. One support level that traders are watching especially closely is the area around 98 cents. This level has become increasingly important because XRP is approaching it after months of downward pressure. If buyers step in aggressively near this zone, it could become the foundation for a larger recovery attempt. However, if selling pressure remains strong and this level fails to hold, attention would likely shift toward lower support targets. Markets often test multiple support levels before finally establishing a durable bottom. Therefore, investors should not automatically assume that the first support zone will end the correction. Instead, they should monitor price behavior carefully and look for signs of accumulation, improving momentum, and increased buying activity before concluding that a reversal has begun. Volume analysis adds another layer to this discussion. When examining visible range volume profiles, several notable support clusters become apparent. These clusters represent areas where significant trading activity occurred in the past, often creating zones where buyers and sellers are likely to engage once again. Some of the strongest historical volume concentrations appear near lower price levels, reinforcing the idea that XRP may eventually find substantial support if the correction continues. Volume-based support zones are particularly valuable because they reflect actual market participation rather than purely mathematical calculations. When large amounts of trading activity have previously occurred at certain prices, those levels often become magnets for future market reactions. Of course, the ultimate goal is not simply identifying where XRP might stop falling. The real objective is identifying what happens next. If XRP successfully forms a bottom, the first thing analysts would want to see is a clear impulsive move to the upside. In technical analysis, strong upward movements often indicate that buyers are regaining control and that a new trend may be developing. A confirmed bottom is rarely identified by a single candle or one strong day of trading. Instead, it is usually confirmed through a sequence of higher highs and higher lows that demonstrate growing demand. Until such a structure appears, the possibility of additional downside cannot be ruled out. The shorter-term chart provides even more insight into the current market environment. When we zoom into the lower timeframes, the bearish pressure becomes easier to see. The consolidation phase that developed over several months appears to have acted as a pause before another leg lower. Sideways consolidations often serve as continuation patterns within larger trends, and that possibility remains relevant for XRP. While consolidations can sometimes mark major bottoms, they can also represent temporary pauses before the dominant trend resumes. At the moment, the evidence suggests that traders should remain alert to both possibilities while recognizing that the broader trend has not yet fully reversed. From an Elliott Wave perspective, the current structure still appears capable of completing another downward sequence before the correction reaches its final stage. The market has been moving through a series of waves that suggest the correction may not yet be fully exhausted. Importantly, a final move lower does not necessarily mean panic or collapse. In many cases, the last stage of a correction can actually create the conditions necessary for a stronger recovery later. The challenge is that identifying the exact endpoint in real time is notoriously difficult. This is why analysts focus on probabilities rather than certainties. The chart provides clues, but the market ultimately decides the outcome. One key level that could change the short-term outlook is the previous swing high near the mid-$1 range. If XRP can break above this resistance level, the probability of a larger recovery would increase significantly. Such a move would demonstrate that buyers are beginning to overpower sellers, potentially opening the door for a broader rebound. However, even if XRP manages to achieve that breakout, it would still need to overcome additional resistance levels before confirming a major bull market. In other words, one breakout alone would be encouraging, but it would not automatically guarantee a return to all-time highs. Investors should remain focused on the bigger picture rather than becoming overly excited by a single bullish move. It's also important to remember that XRP rarely moves completely independently of the broader crypto market. Bitcoin continues to play a major role in determining overall sentiment across digital assets. If Bitcoin experiences additional weakness over the coming months, XRP could face continued pressure regardless of its individual chart structure. On the other hand, if Bitcoin stabilizes and begins recovering, that could provide a supportive backdrop for XRP as well. This relationship between XRP and the broader market is one reason why analysts often evaluate multiple charts rather than focusing on a single asset in isolation. Another scenario worth considering involves a larger five-wave decline that could initially appear bullish before ultimately producing more downside. Markets frequently create deceptive rallies during corrections, drawing in buyers before resuming their primary trend. This possibility highlights why resistance levels remain so important. If XRP recovers but fails to break through key resistance zones, the rally could simply be another corrective bounce, rather than the start of a sustained uptrend. Traders should therefore pay close attention to how the market reacts whenever it approaches major resistance areas. Those reactions often reveal valuable information about underlying market strength. As we bring everything together, the overall message remains fairly straightforward. XRP is showing signs that it may be entering the later stages of its correction, but confirmation of a bottom has not yet arrived. The trend remains downward, the descending trend line remains relevant, and important support levels continue approaching. The first major support zone sits around 98 cents, followed by lower support levels if weakness persists. At the same time, resistance levels above the market remain critical barriers that bulls must overcome before confidence in a larger recovery can grow. The coming weeks and months may ultimately determine whether XRP is preparing for its next major rally or whether one final phase of correction still lies ahead. For now, patience remains essential, and every important level should be evaluated one step at a time. That's the latest XRP update here on XRP Insider. If you enjoyed this analysis and found it valuable, make sure to like the video, subscribe to the channel, and turn on notifications so you never miss an important XRP update. Let us know in the comments below whether you think XRP has already found its bottom or whether you expect one more move lower before the next rally begins. As always, we'll continue monitoring the charts, tracking the key support and resistance levels, and bringing you the latest XRP developments as they happen. Thanks for watching, and we'll see you in the next XRP Insider update.